So what is a temporary buy down for a mortgage? We'll go ahead and answer that question today. We're going to take out our notepads, go back to school, and switch our major over to mortgage. So what is a temporary buy down? So a temporary buy down is going to be a situation most commonly whenever a seller gives a credit at closing for the buyer to buy down their interest rate for the first 2 or 3 years of the mortgage. So how does this look? So for a 7% note rate on a mortgage, a 2-to-1 buy down is going to buy down the interest rate from 7 to 5 in the first year, and then from 7 to 6 in the second year. And then from the third year to the 30th year, it's going to continue to be that 7%. So a way to look at a temporary buy down, let's say a buyer comes in and is going to purchase a home for $500,000. The seller is going to net $500,000. The seller would also be willing to sell the home for $509,000 and give you a $9,000 credit. And on a temporary buy down, what's essentially happening is that $9,000 credit is going into an escrow or a savings account. And each month, you're going to pay a portion of that savings account towards your payment, but you're setting it up front. So, for example, on a 2-to-1 temporary buy down, $509,000 purchase price, $407,200 loan amount, that's 20% down. What we're going to be looking to do is raise the purchase price from $500,000 to $509,000, and you're going to receive a $9,000 credit at closing, which is going to go into a temporary buy down account. The note rate, 7% first year, 5%. That's going to be for the year. You're going to be saving around $6,000 in interest, $500 a month. For the second year, the interest rate goes up to 6%, saving you $3,000 a year or $250 a month. For the third year through the 30th year, it's going to be that 7% interest rate. So whenever we look at it, there's two options. Do we want to set up this temporary buy down, or would it be better for us just to receive a $9,000 credit at closing, which is going to go to your closing cost? Those are kind of our two options we want to look at. So if the situation occurs where in 6 months, rates drop to around 5.5%, we're going to be wanting to refinance out of the 7% mortgage. So what happens after 6 months if we refinance? Well, after 6 months, you would still have $6,000 left in that temporary buy down account, and that's going to go to paying down your loan amount at the time of the refinance, which is going to bring your loan amount to $399,200. Now, let's say instead of setting up a temporary buy down, we just took that seller credit in the form of seller concessions at closing and paid those costs towards closing costs. So essentially, we had $9,000 more in our pockets at the time of closing. Well, in that situation, after 6 months, your loan amount is going to be $404,200, but you'll still be sitting on $6,000 more in cash at the time of the refinance because you received that credit against your closing cost at the time of the closing. So you'd have that $6,000. You'd also have the option of putting that $6,000 towards your loan amount. So it's a break-even situation. And the way you want to look at the temporary buy down is it's essentially a budgetary way to finance the mortgage. We're going to go ahead and take that $9,000, put it over to the side, and it's going to be a way for us to budget like a savings account where each month it's drawn out of that savings account to pay some of the mortgage. Now, if you were a person who didn't like that kind of a budget and you wanted to have that cash on hand and invest it into something else, have it as a rainy day fund, I would suggest just go ahead and take in the seller concessions at closing. It's kind of like what people do where they put a 0 on their allowances on their W-9 and they just expect in February to receive a refund from the IRS. It's a way of budgeting your funds. You're not going to be cheating out on interest or anything like that. It's just it's a good way, a financial tool to set aside money to go ahead and lower our monthly outflow in the future. So if you have any questions on a temporary buy down, whether it's a good fit for you, please feel free to reach out to me and follow me on social media at Facebook, Instagram, or YouTube. I hope everyone has a great rest of their day.